This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast, and that's where you will find us. Tom Keene, he is off today. We assume he's at a cafe somewhere in Paris or Rome or something
early.
like that.
Yeah.
Exactly. No, not to worry. We got David Gura for 5 hours. I don't know how his agent allowed that to happen, but we've got David Gura for the next 5 hours, so we're going to plow on through here the day after Christmas here. We've got futures looking a little bit negative here. The S&P off about 20 points, the Dow off 150 points, and NASDAQ off about 60 points. Coming up, we're going to check in with some market participants here. We're going to focus on equity markets, debt markets. Tim Chubb, CIO at Girard Advisory Services, he's going to kick it off here. David Katz, President and CIO of Matrix Asset Advisors, also going to join us. And then in studio, we actually have somebody who's actually working today in studio. How about that coming in? Sarah Hunt, Chief Market Strategist at Alpine Saxon Woods. Get us her thoughts on what's going on with these markets here. Again, a little bit of a sell-off here in the futures. Not much happening here, but we're going to be with you for the next 5 hours. Right now, let's head down to Washington, D.C. Amy Morris has got us Bloomberg Business Flash. Amy.
All right. Thank you, Paul and David. Futures are lower at this hour. S&P futures off by about 20 points, down 0.3%. NASDAQ down 0.3%. The Dow down about 0.4%. The 10-year Treasury yield at 4.62% and the 2-year yield at 4.35%. Alibaba Group Holding is merging its South Korean operations with E-Mart's e-commerce platform to better compete in the country's online retail sector. The joint venture will own 100% of Gmarket and could be valued at about $4 billion. Shares of Alibaba now 2.7% higher. Japan Airlines has resumed ticket sales for international and domestic flights after resolving a system malfunction that was caused by a cyber attack. Now, officials with the airline say there was no virus damage. Flight safety was not impacted, although a couple of dozen domestic flights were delayed. Japan Airlines shares now down 0.2%. Taiwan has blocked Uber Technologies' planned $950 million takeover of Foodpanda's local delivery business on anti-competition concerns. That thwarts the U.S. company's efforts to expand in Asia. Now Uber shares are 0.3% lower. That is your Bloomberg Business Flash. Paul and David.
Amy Marsh, thank you so much. We appreciate it. Amy Marsh, the pride of the University of South Carolina. How about
Gamecocks,
that?
yes.
Gamecocks, exactly. I mean, I actually went to a football game when I was at Duke for business school. We went down to South Carolina. Drove down, saw I think it was LSU.
That sounds like serious football.
Unbelievable.
Yes,
These people
I believe
down there are crazy about their football. It was an awesome experience there. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. David, what are you looking at this day after Christmas? Kind of quiet, which is okay.
Kind of quiet, and I expected that it would be, but very eager to get a sense from the guests we're going to talk to this morning about what they're thinking about for the year ahead. I think a lot of enthusiasm about what this new administration might bring when it comes to markets, some trepidation about what the Federal Reserve might do. So, again, eager to see sort of how people are parsing all of that and sort of charting a path ahead. Yep,
absolutely. Let's go to our first guest here, Tim Chubb. He's the CIO at Girard Advisory Services. Girard, Tim, thanks so much for joining us here. Again, we've had a couple of years of north of 20% returns in the equity markets. What should we expect for 2025?
Sure. Yeah, thanks for having me. It's been an extraordinary couple of years, and also a lot of extraordinary concentration as well. So making things even more challenging for us on the active management side. But ultimately, I think we're going to see earnings broaden out, which should support broadening out within equities more generally next year. It's been a number of years waiting for the fundamentals outside the Magnificent Seven to really support higher equity valuations, and I think 2025 could actually finally be the year that we start to see that That said, I think the demand on the hyperscaler side of things should be really supportive of NVIDIA and the rest of the, for the most part, broader Mag 7. But overall, getting a bit more excited about some of the other longer term opportunities and maybe even some sectors like healthcare, where ultimately we're going to start to see some reinvestment ahead of this big patent wall, but certainly a longer term view.
Tim, let's talk a bit more about that broadening out. We got some of it. I remember talking to Michael Hartnett at Bank of America maybe over a year ago now, he who coined that term Magnificent Seven at the beginning. And we talked about the need for there to be a broader market rally going forward. We've seen some of that. You mentioned healthcare. Where else are you looking, and how much is that tied to what's happening in Washington and the potential for policy changes here in the U.S.?
Sure. I think a large part of it, really the last couple of years has just been the expectation that we would have sort of this V-shaped recovery after the post-COVID boom. And healthcare is kind of a good example of that. Industrials, we've seen ultimately this massive inventory cycle that needed to be worked through. And so we're starting to get even further away from, lapping those more difficult comps. And as a result, looking around, just the broadening out of the artificial intelligence, sort of tidal wave here on the energy and infrastructure side of things, with a company like MCOR, for example, has been one of our favorites, but beyond that as well within technology, within semicap, and just the expectation that we'll likely see ultimately the ROI for AI to be a bit quicker for software, and so there's a number of companies up and down a number of sectors, including healthcare, like Aviva Systems, for example, that we think would be able to likely bring that ROI to the forefront. But in the context of the backdrop of the economic cycle, it's exciting. I guess that you'll likely see a revision to growth next year, but one that we're a bit more cautious with. And so everyone's been so sanguine on growth. Everyone's outlook is no recession, but if we ultimately get a little bit of a growth scare in the first quarter, we'll see how quickly that changes. I think your colleague John Farron mentioned a Best Buy date on the outlook this year, which I did agree with.
Hey, Tim, how about on the fixed income space here? I mean, I look at the returns year to date in 2024. The best returns have been in high yield, leverage loans. I mean, people taking some credit risk out there. How do you think about 2025 from a fixed income perspective?
Sure. Well, given just the move that we've seen within spreads, we're getting to a point where ultimately rates are looking a bit more attractive from an alpha generation standpoint. So, curve positioning. But we've had a healthy allocation to high yield on the credit side of things, and also investment grade. And that's largely been a function of, a lot of the bad stuff is just moving to private credit. And so now we have a higher quality, sort of universe on the high yield side of things, which with a much lower implied default rate than we would have expected in the past. So spreads may have gotten a little too tight. We're paring back there right now, adding a little bit to duration and trying to remain, a bit diversified amongst our exposure there within the fixed income side.
Do you expect that sort of growth in private credit to continue in the new year? We've seen just sort of incredible growth over the last year or 2 years. What's your sense of sort of how much that's going to grow going forward into 2025?
Sure. I don't have any, exact figures, but I can tell you, from an allocator standpoint, it's something that our client base is requiring and demanding in this market. Ultimately, there's certainly great places to get it on the public side of things, as far as our active management is concerned. But the demand is there from our client base, and I would expect to see a moderation in growth, but ultimately, private credit, to continue to expand at a pretty rapid rate over the next, several years.
Yeah, I think if I come onto Wall Street now as a young person, I think private credit.
That's where you'd want to be.
I think that's kind of where the money's going. Hey, Tim, how about on the equity side here? We've had 2 years of north of 20% returns. I'm not sure we've had the commensurate growth in earnings during that period. Where are you on valuation here? I gotta feel like we're rich, if not more than rich.
Yeah, it's a good time to take some profits and ultimately recycle some of that capital. We're long term, long only. So ultimately, as you think about, taking $1 of savings and allocating that entirely under the mattress or entirely into the stock market, it's probably somewhere in between right now. But at the same time, earnings growth should continue next year. I think that'll be, supported by a durable Mag 7 earnings growth figure. And then, like I was saying before, the expectation that we'll get a little bit of broadening out down market cap and within, the S&P from a sector standpoint as well.
Tim, we've been centering this conversation squarely in the United States. And I wonder if you're looking at all outside of U.S. borders for opportunity, be they in equities or something else. Are you optimistic about assets globally, or are you pretty much focused here on what's going on in the U.S. As we move into the new year?
We are, yeah. So as allocators, we're looking outside the U.S. and ultimately benchmarking ourselves to something similar to, the MSCI all country. We've been overweight the U.S. Really, this U.S. exceptionalism theme has been something that's, persisted for not just the last, 6 or so months or 6 weeks. It's been, the better part of the last 15 years now. And so it's the difficult contrast of the U.S. equity valuations of, perhaps we're a bit stretched, and I would expect that we are a bit stretched here in the United States. But relative to the rest of the world, I'm not so sure we are. And what I really worry about is some of this, serious move that we've seen within the dollar. I think up about 7% in the last, several weeks here. Pretty significant move, and what that means for EM countries, dollar-denominated debt, and ultimately, growth ex-US, I think, is going to be challenged by some of this fiscal tightening of the U.S. dollar.
Tim, thanks very much. Really appreciate it. Tim Chubb, he's the CIO at Gerard. He is all in on Philadelphia. Tim Chubb is Westchester University down there in Philly. He's been in Philly his whole. I mean, we didn't even get to the. You talk to somebody from Philadelphia, you got to just say, "What's your favorite cheesesteak?" I mean, where do you go? Do you go to Gino's?
I know you have a preference. When I went down there, you gave me a lot of tips on what I should be doing.
Yeah, I'm a Gino's guy, but I'll go pretty much. I mean, they're all good. I mean, and I'm not like a crazy. Oh, I'm a Gino's guy, or I'm a Jim's guy. I mean, they're all good.
My greatest regret still is not doing a live hit for surveillance from outside of cheesesteak purveyor.
Exactly. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, David, and Amy. President Biden is headed to St. Croix later today to spend the rest of the holiday season on the Virgin Islands. But before President Biden left, he delivered his annual holiday message from the White House on Christmas Eve.
Too often we see each other as enemies, not as neighbors, not as fellow Americans. So my hope this Christmas season is that we take a few moments of quiet reflection, find that stillness in the heart of Christmas, and look at each other as who we really are, fellow Americans.
The president is also focused on geopolitics after Russia launched a large-scale attack on Ukraine's power infrastructure on Christmas Day. Ukrainian President Volodymyr Zelensky says it included more than 100 attack drones and 70 missiles, some of them ballistic. President Biden called the attack outrageous. A 30-foot menorah was lit in front of the White House. It marked the first night of the Jewish holiday of Hanukkah, which also happened to be Christmas night. During the event, Homeland Security Secretary Alejandro Mayorkas urged the crowd to rededicate themselves using the lessons of Judaism.
We can lean into our shared tradition and values as a beacon for what we aspire to. This Hanukkah, let us rededicate ourselves to the light that defines us and the better world we seek to build.
Meanwhile, New York City lit the world's largest menorah last night. Global news, 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, David, Amy.
Michael Barr, thank you. The business of sports, the Chiefs, they just don't lose, do they, Michael?
And it's surprising because I thought there was a report out there that Patrick Mahomes was done for the season. And all of a sudden, he's back.
Touchdowns. All right, here's my thing. If I'm defending the Chiefs, I have somebody, either a linebacker or defensive back, on Travis Kelce the entire game. But every time I looked up, he was in space with nobody around him.
And he scored again.
And he scored. It's unbelievable. I mean, it can't be that hard. Just put some body on that guy so he doesn't beat you.
I agree. And for the record, it's like, and the Steelers, by the way, they lost, and now that's 3 in a row.
Yep.
They're still in the playoffs, but now it kind of messed everything up for them.
All right, so we're talking New York football? I don't think so.
Okay, not on this post-Christmas day. Let's keep it sacred
post-Christmas day. We'll keep it safe here. All right, Michael Barr, thank you so much. We appreciate it. S&P futures -20, NASDAQ -65. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Amy Morris, and futures are lower at this hour. S&P futures down 0.3%. NASDAQ futures down 0.3%. The Dow down 0.4%. The 10-year Treasury yield at 4.62% and the 2-year yield at 4.35%. Oil prices rose from China's fiscal stimulus measures and a U.S. industry report showing a drop in crude stockpiles. Brent crude and West Texas Intermediate both up 0.5% at this hour. Shares of Chinese computing equipment makers advanced after the nation said it planned to include the sector into the investment scope of local government special bonds. King Signal and Broadex Technologies each surging as much as 20%. Toyota shares rose 6% in Tokyo following a two-day gain of 11% on reports of a potential increase in return on equity targets. Analysts expect the company to boost earnings and profit margins, and shares of Toyota now 6% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris, and that's a Bloomberg Business Flash. Paul and David.
All right, Amy Morris, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're in New York City. No traffic getting in today.
Very easy to get in.
Zip in today. I think
no pedestrians. What's early, but
came in from the Jersey Shore. It was maybe an hour coming in today, so it was good stuff. We'll be back down at the beach by 3 o'clock today, no problem. We're also streaming live on YouTube, so head down to youtube.com, and that's where you'll find us over there. David Katz joins us. He's the president and chief investment officer, Matrix Asset Advisors. Hey, David, I mean, what are you kind of telling your clients these days? I mean, they're fat and happy here. They've had 2 years of north of 20% returns in the S&P 500. They think they're all stars here because they've done such a great job. What do you tell them about 2025?
Well, we think you've had, as you said, 2 great years, and we think it's going to be followed by definitely something that's much slower on the upside, a lot more volatility. So now is not the time to increase risk. You want to be very happy with your gains over the last 2 years, but set lower expectations. Look at your asset allocation. We don't think you want to be significantly overweighted to stocks now. You want to get back to a neutral position. We think that there are a number of good things that are going to be coming up in 2025, but also a number of concerns. So we expect a lot of market volatility, both ups and down. And if we're fortunate, we get returns that regress to the mean, up like 8, 9, 10%.
David, talk a bit about the equilibration that we've seen here since the election. So we saw the swoon in enthusiasm in the markets immediately after that. I think some recalibration since then. Is that process done with? Do you sense that folks have an appetite here to look seriously at their portfolios and to do the kind of rebalancing that you're talking about? Or are they still of the belief that maybe there's more exuberance to come here?
We think that over the near term, there's more exuberance to come. The market is really charged. On the day that it's happy, it's up a few hundred points. On the day that it gets spooks, it's down a few hundred points. So we would not look at the short-term trend as continuing. We do think things are going to change a little bit when you enter 2025. There are big gains this year, so a lot of people can't sell stocks right now because they'd be paying a lot of taxes. That changes January 2nd. You have a new administration take office late in January. They expect to put a number of the policies that they've talked about in place. We think the market could get spooked by that. So we would not follow the a significant rally of the last few months and expect that to continue. We do think come January, February, you're going to get that volatility, both good and bad.
So, David, if the Mag 7, if the big cap tech names, if they've maybe had earned for a little bit of a pause here, do I think about value? Do I think about small to mid cap? I mean, I kind of feel like I fall into that lurch every once in a while, and I just don't get paid for thinking about small mid cap. I don't get paid for value. How do you think about that?
We think you're going to get paid this time. We think if you look at the market on a valuation basis, it's at 22 times earnings. Growth stocks are at 28 to 32 times earnings. So they're about 1.5 to 2 standard deviations above the norm. Value sells at a pretty reasonable valuation. Dividend stocks, which have done fine this year, but have really lagged in the last few years, we think are well positioned. Small cap, as you mentioned, have not done a whole lot. So we think those are three areas that investors are going to get paid significantly for. We think that it's lower risk to be in those stocks. And we think that the growth sector, which has had a phenomenal run in the last 2 years, is going to slow down a lot. So the opportunities are in the things that have not worked as well. We think international, which also has lagged the U.S. for the last 5 years, 10 years, and 20 years, is poised to do a little bit better. That's at about 14 times earnings. Our market's at 22 times earnings.
David, if I'm one of those folks who is contributing to the $6 trillion sitting on the sidelines here, hasn't been invested, is thinking about it, what's the catalyst going to be for me to do it? What's your advice to clients who maybe despite all odds here and despite what they've seen have decided to sit in cash? What's going to bring them back in? And when should somebody, you talked about the kind of swings that we've seen here in recent weeks, when's the opportunity to jump back in?
So we would not jump in whole hog right here. We would not chase the rally. We do think, as I said, there's going to be volatility. So look at your cash, look at your target asset allocation. If you want to put money into the stock market, what we'd say is there's going to be a 5 or 10% correction at some point. Use that weakness to start to build stocks or dollar cost average. After the first 3 or 5%, put a little bit of money in. If the market sells off a little bit more, add some money to that. You're never going to get it exactly right, but we would not chase the rally. This is not the time to be throwing new money in. However, there are some very good stocks that have totally missed the rally over the last year. So on a stock-by-stock basis, we do think there are opportunities if you want to put money in. We just would not chase the winners. We would buy really good businesses that have lagged the 2024 rally.
All right, let's go to one of those 2024 laggards. Pepsi. PEP is the ticker. I'm not sure if I'm buying the soda or I'm buying Fritos and the salt snacks.
Or both, Paul.
Or both, exactly. I'll buy either. What's the call on Pepsi here? I know it's down about 10% year to date, 2024.
So we owned Pepsi a few years ago. We had sold it. We're buying it back now because the stock, as you said, is down 10%. It's down like 15% from its highs, yet the earnings keep going higher. We have not liked consumer staples, but they lagged a lot this year. We think they're going to be a slow and steady place to be in the upcoming year. And we think Pepsi is a really well-run company. You're buying it at the lower valuation that it's been in some time. You're getting a 3.6% dividend. So this is a place that you can make money. I think if you look at some of the other stocks that we had put on our list and recommended today, we think they have a lot more upside. But Pepsi, Nestle's are slow and steady consumer staples that are going to be a good place to hide in a more volatile market.
David, let me ask you lastly, as we look ahead here to 2025, I'm sure you're looking back as well because past is prologue. And when it comes to policies that the incoming president might put in place that he's talked about on the campaign trail, what are you looking at in terms of what happened during his last term for guidance on what might happen here? Or is this novel new territory? You're thinking differently about the way in which he talks about immigration or tariffs or trade policy more broadly. How are you overlaying that on the kind of analysis that you're doing? And I should point out for our YouTube viewers are able to see here, you got a terminal behind you. Talk about how your analysis kind of colored by that past term.
So you want to take note of the things that happened in the last term, but we do think he's going to be a little bit more aggressive in terms of tariffs. We fear that he's going to be more aggressive in terms of deporting immigrants. If those two things were to take hold, we think both are pretty inflationary, both are bad for global trade. So that's why we're talking about that volatility. There are a number of things in the Trump administration that are good for the economy: less regulation, more M&A, not increasing taxes or lowering taxes, all good, offset by the deportation and immigration policies, and definitely offset by tariffs. We think tariffs are a loser's game. We think it might hurt other countries worse, but it's definitely going to hurt the U.S. So that's why we're looking for that volatility. You'd want to have that money buy into that weakness because we do think the U.S. economy is pretty strong. It's going to get through it, but we think the stock market's going to get spooked periodically.
All right, David, thank you so much. We appreciate that. David Katz, he's a president and chief investment officer, Matrix Asset Advisors. Not really chasing this market, not chasing the big names. And looking at his stock picks for 2025, he's trying to find the ones that have been laggards in 2024. So some consumer names, some healthcare names as well. So we'll keep an eye on that. I didn't know that the European markets are closed today. I just looking at my screen here. I got nothing for this stock. 600, the DAX, the CAC. I mean, everybody's just taking a day off.
We got to make Boxing Day a thing here in the U.S. I think that's my mission for the new year.
That's a great call. I'm not sure what Boxing Day is. I've heard a million different, maybe you can define it for me later, but I'm all in for Boxing Day. S&P 500, negative 20. The Dow minus 160 points, and the Nasdaq futures off about 72 points. That's 0.3%. Yields pushing a little bit higher yet again. 10-year Treasury yield 4.62%. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Amy Morrison. Futures are lower at this hour. S&P futures down 0.3%. NASDAQ futures down 0.3%. And the Dow down 0.4%. The 10-year Treasury yield at 4.62% and the 2-year yield at 4.35%. Now, futures and treasuries are lower as traders are waiting for initial jobless claims data and a government bond auction later for today. Bitcoin declined 3% despite MicroStrategy's plan to issue more shares to buy more tokens. Dan Ives at Wedbush says they're raising their price target on Apple to $325. That's up from $300, saying that Apple is heading into a multi-year AI-driven iPhone upgrade cycle, still being underestimated by the street. Shares of Apple right now down 0.2%. Cryptocurrencies and stocks associated with Roaring Kitty are higher after that trader's apparent Merry Christmas wish. Keith Gill's message conveyed his Christmas wish and was not nearly as cryptic as some of his earlier posts. The post pushed GameStop 7% higher overnight. GameStop shares right now are about 4% higher in the pre-market. That's a Bloomberg Business Flash. Paul and David.
All right, Amy Mars, thank you so much. We appreciate that. David Gura is sitting in for Tom Keene today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so you can head over to youtube.com. That's the intraweb. Search Bloomberg Podcast, and that's where you'll find us here. All right, what are we doing in these markets here? I don't know, stocks, bonds, commodities, alternatives, no idea. Talley Leger, he might have an idea. He's a chief market strategist for the Wealth Consulting Group. Talley, what are you telling your clients here as you think about 2025? What are you telling your clients?
So look, I think, Paul, in the very near term, the U.S. is still looking like the best house in a bad neighborhood. You know, just looking at what's going on in the rest of the world, given the political and economic problems in Europe, as well as some challenges in Russia and in Syria, I think we could benefit, talking about U.S. dollar denominated assets, from some flight to safety and quality flows in the near term, which should help keep us buoyant.
You rattled off a couple of those geopolitical risks. What are you most worried about, or what are you paying the closest attention to? Obviously, there has been this promise from the incoming president that on day one, maybe day two, we'll see how long it takes, can resolve these wars that are taking place in the Middle East and in Ukraine. What are you sort of watching most closely as you think about what the market impact might be into the new year?
So, I'm not really a geopolitical strategist, but as we know, as practitioners, these events can create bouts of near-term volatility that I'm personally trained to look past. So, look, this year, 2024, has been devoid of any meaningful correction in stocks. So I think if we do get some kind of flare-up in those geopolitical events, or even more importantly, a growth or jobs-related scare here at home, I'd be looking to buy some of those cyclicals that could bear the brunt of such a pullback.
Talley, how do you think about valuation here? We've had just big moves higher in the markets. We've had some good earnings growth, but I'm not sure the earnings growth has been commensurate with the moves in the stocks, which I know for a lot of folks raises some valuation concerns. How do you deal with that with your clients?
Well, I think, Paul, the point is well taken, and valuations, especially in the larger, growthier, techy areas of the market, have been expanding for good reasons. So I think there's a couple ways to answer that. We're at a stage in the market cycle where earnings are picking up here. So I think we can grow into some of those loftier valuations, but you really don't have to look very far, just beyond the biggest, most magnificent companies of the market to find immediately better relative value opportunities. So in the 500, that could be equal weighted concepts, or coming down the size curve to mid and small caps, and even back to the international points that we were making earlier.
Let's talk a bit about sort of where AI is headed. Of course, this has been a big story in 2024 as it was in 2023. You bring up the Magnificent Seven. We've talked a little bit this morning just about the extent to which the market has broadened out so much as it has. Focusing on AI, that part of technology in specific, are there facets of it that you're watching for in the new year where, again, that enthusiasm might lead to other companies doing well on the heels of those names that we've mentioned so many times here in 2024?
Yeah, well, I think some listeners might be surprised to know that semiconductors as a group actually witnessed a bear market decline from July into August. I think they fell something like 23%, just looking at the stocks, for example. And we're still in corrective territory there, even though we've bounced somewhat. But I think conceptually, technology, including this AI theme or mania, that's what it's kind of building up to be, I think itself could help the rest of the market to catch up. So with a little bit of patience, we need to allow the other companies of the market that are making these AI investments time for them to pay off.
So, I mean, let's assume that, we're not all like Tom Keene and we've been long the Magnificent Seven and we're just clipping coupons here. If we haven't been there, where do we go now for value here if we think about 2025? Are there some sectors that screen well for you guys?
Yeah, so again, I might sound like a bit of a broken clock here, but I still like the domestic cyclicals, like financials and consumer discretionary. So those would be the third and fourth best performing sectors. Again, might be a bit of a surprise to some listeners year to date. So I'm sticking with those views. But my biggest surprise looking ahead to 2025 is probably the most contrarian, and it's the sector that performed the worst, and that would be some of the global cyclical materials names. And as a contrarian, I think the starting point for that sector is looking pretty good.
Talk a bit more about that. I'm intrigued by what you're saying there. What do you see in that sector that other investors, other market participants maybe haven't seen over the last year?
So if there's one thing that I do know, it's whatever the market themes and narratives are at present, they're probably going to look very different 1 year hence. And so again, I like the setup as a contrarian. It's the worst performing sector. But again, another nice surprise heading into 2025 here, lo and behold, we've got a Chinese manufacturing sector that is now expanding once again. Why? Well, I think it's getting some help from near 100% of global central banks that have been cutting rates. I think the two exceptions are maybe Brazil and Russia. They've been raising rates, but by and large, I think the policy stimulus is starting to show some grassroots there, and that's helping, I think, lay the foundation for a better year ahead for that particular sector.
Hey, Talley, let's switch gears. Talk a little bit about the fixed income space here. The 2-year Treasury. I mean, I can just park myself in a 2-year Treasury, 4.35%, clip that coupon. I'll sleep well at night. Do I do that, or do I take some credit risk?
So I think it is probably an environment where you are clipping coupons here, Paul. The credit spreads, I'm not seeing any signs of turbulence there. That's another reason why I think that the cycle can continue for the equity market. But the valuations there are looking a little bit stretched. We were talking about that across the cap spectrum earlier. But I would be pretty selective in the credit space. When I think about government bonds, though, Paul, and this is interesting, cutting or clipping coupons, as you say, look, we're coming off a couple of really challenging years for treasuries. The starting point for yields is higher, better, and the relative valuations compared to stocks, I think, are much more attractive. So if we keep getting this disinflationary trend and the housing market softens, helps continue that decline in overall prices in the economy, I think yields could soften. And by the way, that supports the bottom of the capital structure. That's stocks as well.
Talley, are you based in Vegas?
No, that's where HQ is. I live here in central New Jersey, Keyport, New Jersey.
Jersey, that's where it all comes back to Keyport. I mean, I'm thinking, I see my notes here, it says it's Vegas, but he's in Keyport. I mean,
Pearl of the Bay Shore.
I will be on my train
No one
today
can outfox
home.
you when it comes to
I will
New
be
Jersey
going
geography.
past Keyport on my train down to the Jersey Shore here today. Talley Leger,
yes.
Chief Market Strategist, the Wealth Consulting Group, joining us here from the swamps
Happy
of
New
Jersey.
Year.
We appreciate that. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, David, Amy. Authorities are investigating what caused an Azerbaijani airliner with 67 people on board to crash in Kazakhstan. An official says 38 people were killed, but 29 survived. The plane was en route from Azerbaijan's capital to the Russian city of Grozny when it was diverted and attempted an emergency landing. Azerbaijan's president said that the weather had forced the plane to change from its planned course. Russia's Civil Aviation Authority said that preliminary information showed that a bird strike led to an emergency on board. It was a scary Christmas night at Phoenix Sky Harbor Airport. 3 people were shot and another stabbed during a dispute in a terminal. Phoenix Police Sergeant Myra Reeson.
We have 1 adult female who is listed in critical condition. It is life-threatening still at this point. 2 adult males are listed in stable condition, and the adult male that had the at least 1 stab wound is in stable condition.
Police say all those involved were known to each other. A juvenile was arrested. A grim discovery was made on a United Airlines plane. Officials in Hawaii are investigating the discovery of a dead body found in the wheel well of a United Airlines Boeing 787. The jet had flown from Chicago to Maui on Christmas Eve. On Christmas Day in Philadelphia,
So we have a home-cooked meal.
You made my day. Thank you. Thank you.
Philadelphia's 14th Police District spent the day distributing gifts and hot meals. Captain Stuart McCullum says it's the 20th year of the holiday tradition.
We selected based upon positive circumstances, kids that have done exceptionally well as some families that unfortunately fell on hard times or went through some, extraordinarily unfortunate circumstances.
In Washington, D.C., the 46th annual National Menorah Lighting Ceremony took place last night, ushering in the start of the 8-day Hanukkah celebration. The start of Hanukkah happened to fall this year on Christmas. Meanwhile, New York City lit the world's largest menorah last night. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Amy.
All right, Michael Barr, thank you so much. We appreciate that. David, yesterday at the Sweeney household, we had more Jewish people in our house than we did Christians. So we did the whole Christmas thing. Then we did the Hanukkah thing, lit the menorah, the whole thing.
You could do it all in one day.
Yeah, it was awesome. So we were all over the place.
How was the holiday?
It was
both
great.
of them. How were the holidays?
The holidays, they're great. Everybody was happy. Everybody doing their thing. So, but it was the first time since I was a kid where that we did the whole Jewish tradition with the menorah and all that kind of stuff, and the prayers and all that kind of stuff. And when I was a kid, I used to do it with my friends, but I hadn't done it in a long time.
All under your roof. And
exactly.
any gifts of note that you received? Let's do it the ones you received.
Yeah.
Gift certificates.
Yeah, nothing good. I mean, that I can really call out. Underwear. How about that?
Underwear.
Does that work?
Always useful. It's a useful gift. Is always appreciated.
Exactly. Always useful. But no, it was good. And I do note that the football games, Michael Barr, on Netflix went off without a hitch. There's no
issues.
No technical issues. I think so. That's good for them.
No technical issues. And by the way, talking about sports, the NBA Christmas game, the Knicks game, that was also streamed in Disney World.
Was it?
Yes, where you had Minnie Mouse and Mickey Mouse, and they we're simulating the game.
Animated version of
Yes.
the basketball game. I mean, what are they going to think of next? Yeah, the Knicks won, which was a good thing. So, I mean, there's all kinds of sports yesterday. But it was, again, the NFL going up against the NBA. It used to be that the NBA owned Christmas Day.
That's right.
But I guess
they've got a ratings issue now, so they got to deal with that.
Yeah, we'll have to see about that. So lots going on yesterday. Now people are going to kind of ease in to the new year. Looking at the markets here, kind of easing in to the end of the year. The S&P future is really, really quiet here, off about 22 points. The Dow off about 167 points. And the NASDAQ off about 90 points. That's 0.4% kind of across the board. So a little bit of slippage there. It's 10-year Treasury yield. We're about 4.62% on the 10-year. WTI crude oil holding right around $70 a barrel. I'm watching Landman, so I'm all about the oil and gas industry. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Amy Morris. Futures are lower. Right now, the S&P futures are down 0.4%. NASDAQ futures down 0.4%, and the Dow down just about 0.4%. The 10-year Treasury yield at 4.62%, and the 2-year yield at 4.35%. Bitcoin declined, even with cryptocurrency stockpiler MicroStrategy planning to issue more shares. That's a move that would allow it to buy even more tokens. Bitcoin is down 2.8% at this hour. MicroStrategy shares are 2.6% lower in the pre-market. Toyota shares rose 6% in Tokyo, following a two-day gain of 11% on reports of a potential increase in return on equity target. Analysts expect that company to boost earnings and profit margins. And oil prices rose from China's fiscal stimulus measures and a U.S. industry report that showed a drop in crude stockpiles. Both Brent and WTI now more than 0.5% higher. And that's a Bloomberg Business Flash. Paul and David.
All right, Amy Marsh, thank you so much. We appreciate it. I am proud to say, I don't think I went to a store this Christmas.
Is that right?
Season. I did a couple clicks, buying stuff.
Yeah.
But a couple of days ago, I drove past the Short Hills Mall in New Jersey. Line of cars. You couldn't even get into the parking lot.
Still a mecca for consumerism. People are still going.
People are still. If I had to say, I would think retail sales would be pretty solid during this holiday season. I don't know. Let's check in with Nicole Larson. She does this stuff for a living. She's a national research manager, retail services at Colliers. Nicole, again, I kind of take it as a badge of honor that I did not go to a store this holiday season, but I know a lot of people did. How are retail sales looking for the holiday season?
Well, I will say you were probably one of the few that did not go to the store. I don't know how you managed to do that, but honestly, I was very impressed. We were pretty conservative with our holiday spend forecast. What we saw, and this was as of Tuesday, Visa's spend monitors said that holiday sales are up 4.8%, and that doesn't include Christmas Eve sales. So I'm actually really interested to see the final number come out once everything is, tabulated. I'm sure the returns are going to be factored in there as well. But what we saw was that in-store spending for holiday accounted for 77%, while the 23% was for online. So like I said, I don't know how you managed to do it, but we also did see a pretty big increase during the Thanksgiving shopping weekend as well for mobile shopping. So it said about 63% of shoppers used their phone to shop during the Thanksgiving weekend, and that was up from 55% last year.
You're going right where I want to go, which is I see this blurring now between Black Friday and Cyber Monday. And I was getting inundated with these push alerts to buy all kinds of stuff on my mobile phone. I mean, that started before Thanksgiving, certainly continued into Friday, and there were more entreaties on Monday as well. We had these kind of discrete days. Friday was for going to stores. Maybe that's not the case as much as it was. It does seem like we're kind of moving to this more amorphous kind of long weekend of online shopping. Is that a fair read of how things proceeded?
Yeah, I mean, and you have to remember too, this Thanksgiving fell a lot later than it usually does. So I think retailers are really trying to push. I mean, we saw so many sales that were already happening in September and October. So the holiday spend was really spread out for a longer period, I would say, this year. Yes, I know a lot of people were not a fan of all the crazy texts and emails that we were receiving. I still am receiving them even today. But it's really interesting. I think, retailers were really trying to push, really trying to stress consumers to make sure that they get their purchases in, because I don't think a lot of people realized until Thanksgiving came that we had such a short holiday window.
Nicole, talk to us about kind of the relationship between bricks and mortar and e-commerce. It seems like, during the pandemic, it seems like we brought forward by maybe 3, 4, 5 years the amount of e-commerce shift. Where are we today with bricks and mortar versus e-commerce?
Yeah, so obviously in 2020, we saw a huge, we really saw the peak of the online sales as a share of total retail sales. We're actually at that same point right now. We're about at 16.2% is what I think the total share of e-commerce sales is right now for the US. I only see that continuing to grow, but in-store is still super vital to consumers. I mean, we're even talking about this now with returns. I'll give you guys a new little phrase. It's called BORIS, which is buy online, return in store. So many consumers feel a lot more comfortable when a retailer actually has a physical store, because they know that even though they may be shopping online, that they can go back into the store and, just feel more safe and more secure when they're able to return that product.
You've mentioned returns a couple of times. I've got a pair of shoes we got for my daughter. They're too small for her. I got to take care of that today or tomorrow. I'm going to go to the store to do that. It's help us understand sort of how the process of returning has changed here. You mentioned folks going back to stores to do it. I was at Whole Foods a few days ago, and I had to return something from Zappos, and I walked upstairs, and it was like a shipping center in its own right, where the cafe used to be in that store. But talk a bit just about how that's changed. That process of returning has changed, and the way that companies, the way that stores are trying to make that go a little more seamlessly.
I mean, yeah, retailers lost $100 billion last year in return fraud. So I think retailers are starting to re-strategize their, return policies. I would not be surprised if a lot of consumers are maybe a little bit upset by some of the retailer return policies that they'll be seeing this holiday season. I think it's really important. Hopefully when the consumers were buying their Christmas gifts, they were aware of the return policy. But I think the return windows are going to be a lot shorter. I think these brands are also going to start becoming more strict and start looking at those consumers who may be, doing return fraud or things like that. It's a very small percentage compared to the rest of the country who is just, returning products that maybe don't fit them or maybe they can't use it any longer. So the percentage is very small, but I do think retailers are already starting to, sort of look out for that in their internal systems and make sure that nobody's abusing the system.
In New York City, talk to us about neighborhood retail. Where are we today versus pre-pandemic?
Oh, yeah. I mean, the local retail has really rebounded to pre-COVID levels. And we've even seen some retail rents surpassing 2019. Wow. One area that I found really interesting was Flatiron is actually, commanding about $300 to $500 per square foot. So I thought that was absolutely amazing. And it just really shows the resurgence of the area.
Paul, just a moment ago, mentioning that giant mall in Millburn, New Jersey. How well are malls doing, and what is as we look ahead here to 2025 and beyond, what does the future of the American shopping mall look like today?
I mean, honestly, whether it's mall or even if it's, neighborhood shopping center, lifestyle centers, what I'm really noticing is that consumers want to be wowed at every every sense of their shopping journey. So whether that's even going to a fast food joint, whether that's even going to a grocery store now, consumers are really looking for, that next Instagrammable moment, or they want to see some cool technology, or they want to be really wowed by the product mix. So I think that's going to be a really big trend going into the new year, is that retailers are going to have to stay on their toes, just like they did during 2020 and moving forward, to continue to, just really match the consumer's energy.
What is return fraud? Is that a big number?
That was the 100 billion that I mentioned, and that was just for 2023. So yeah, I mean, it is large. Like I said, it is a really small percentage of a group of people that are doing it, but unfortunately, this is pushing some of the costs back to consumers.
We've talked a lot over the course of the last year about where people are spending their monies, if it's on experiences or goods themselves. Have we noticed any kind of shift in that? Have you noticed any kind of shift away from experiences back to traditional goods, be they luxury goods or just other kinds of goods people are buying?
We definitely saw during this holiday season that experiential was top of mind for consumers, whether that was, going to concerts or plays. Even if it was going out to eat, we actually were expecting foot traffic to boost about 6% during the holiday season. So again, still kind of waiting for those final numbers to come out. But I just find that really interesting that, people just want to gather again. People want to get together. They're not so focused on revenge spend anymore like we were just a few years ago. So I find that really exciting. And again, I think we're going to see that going into the new year. Also, another category we saw that did really well during the holidays was appliances and electronics. And that goes again with the trend that people are, buying now to prepare for later, especially with the unknown, with these expected tariffs to come maybe within the next few weeks, maybe within the next few months. So we'll see how that goes, but consumers definitely did stock up on those items during the holiday season.
Revenge spending.
Yes,
Love that
exactly.
phrase.
Right, exactly. Nicole Larson, National Research Manager, Retail Services for Colliers. Some good gifts this year. I gave my 4 kids just pat on the back. I said,
very nice of you.
Good job.
Sent them on their way.
Well, yeah, exactly. What have you done for me recently? S&P 500 minus 19, the Dow minus 142, NASDAQ minus 74. This is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news. Tensions between the U.S. and China have heated up even more. The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, boy, we go strong. Sarah Hunt, Chief Market Strategist at Alpine Saxon Woods. She's in our studio. That means we get to keep her hostage for a couple of segments here. We'll talk about these markets here. Where do we go in 2025? I mean, boy, we had a couple of 20% gains in 23 and 24. Where do we go from now? Wendy Schiller is going to join us here from Brown University, give us her thoughts on the latest coming out of Washington, D.C. and the incoming Trump administration. So a lot of geopolitics, a lot of markets coming up, and we will talk about the bond market as well to finish out this hour. So a lot going on. Right now, we're going to head down to Washington, D.C. Amy Morris has got world.
All right, thank you, Paul. Futures are lower across the board. S&P futures down 0.3%. NASDAQ futures down 0.3%. And the Dow now down 0.3%. NYMEX crude oil now trading at 0.6% higher at $70.56 a barrel. And Brent crude now 0.5% higher at $73.97 a barrel. 10-year Treasury yield at 4.62% and the 2-year yield at 4.35%. Alibaba Group Holding is merging its South Korean operations with eMart, the e-commerce platform, to better compete in the country's online retail sector. The joint venture will own 100% of Gmarket and could be valued at around $4 billion. Shares of Alibaba now 2.7% higher. Japan Airlines resumed ticket sales for international and domestic flights after resolving a system malfunction that was caused by a cyber attack. Now, officials with the airline say there was no virus damage and flight safety was not impacted, although a couple dozen domestic flights had to be delayed. Japan Airlines shares slightly lower. Taiwan has blocked Uber Technologies' planned $950 million takeover of Foodpanda's local delivery business on anti-competition concerns. That thwarts the U.S. company's efforts to expand in Asia. Now, Uber shares are down 0.3%. That is your Bloomberg Business Flash. Paul and David.
All right, Amy Mars, thank you so much. We appreciate that. David Gura sitting in for Tom Keene this morning. I assume he's at a cafe in Paris. Bottle of Bordeaux.
Sure.
A croissant maybe.
Escargot, as is his one. Piping hot is always his order.
Is that his?
Yes.
Okay.
I hope I'm not giving away too much, but
he's not doing the museum thing.
No,
he's not doing
he's done
any of that stuff. He's hanging out.
He's
watching
soaking
people,
it all in.
Soaking it all in, doing the Tom Keene, probably with a bow tie. So that's what he's doing, and that's the way he
even on
finishes
vacation.
Out. Yes, exactly
bow ties
right.
on.
So we got David Gura sitting in for Tom. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well here. I think one of the big changes for 2025 for investors is we're going to have a new administration here. We're going to have a Republican Congress. And what does that mean for policy? What does that mean for markets? Our next guest maybe can help us think about that a little bit amongst other topics. Sarah Hunt, she's a partner, chief market strategist at Alpine Saxon Woods. Sarah, thanks so much for joining us here in our studio. When you and your team woke up the day after the election in November, did you change your outlook or think differently about 2025 at all?
I think we definitely got a lot of incoming calls from clients about what that was going to mean and what was that going to mean for markets and their portfolios. I think clearly the equity markets took that as a positive signal in terms of what they think they might get out of a new administration. I think what's happened in the last month is that started to temper a little bit. I think you saw with both the Fed becoming more hawkish and the fight over the CR that it might not be so easy to get as much done as people thought they could get done out of the gate. So the question then becomes, how is that going to play out, and to what extent do we have to think about that in the way of positioning? But it wasn't like a major positioning shift that happened right after the election.
I know we'll talk about the Federal Reserve a little bit in a minute, but I want to pick up on something you said there, which is sort of what happened with the continuing resolution, and there were so many odd dynamics at play there. Chief among them, perhaps, you have a president-elect who was kind of very actively involved in that debate, in that conversation. What did that tell you about what these next 4 years are likely to be like? Are you expecting kind of a redux of his first term in office, or do you feel like you have a playbook from that's going to make navigating those next 4 years a little easier?
I'm not sure that there's a true playbook from the first administration, just because there was a lot of chaos going on then too, except maybe that chaos is part of that. But I would say that what that CR fight showed us with clarity was you don't have a unified party on a lot of things.
Despite the majority in Congress.
Despite the majority in Congress, which is, there was some concern that a majority, right? But it's a very slight majority, especially in the House, and it doesn't seem to be particularly unified. And this seems to be a theme on the Republican side, that the Democrats have a better ability to unify than the Republicans do.
And they can count votes.
Well, they can count votes, and they can get those votes together, and they can get people to stay in one place, whereas it's sort of like herding cats on the Republican side, and that doesn't seem to be, that seems to be an issue if what you're hoping for is an immediate policy response right out of the gate.
I guess we don't know a whole lot about the incoming Trump administration and their economic policies. I guess what we do know is tariffs, some of their immigration policies, and a lot of folks are concerned that what we do know could be inflationary. Is that something that concerns you?
I think it's definitely part of the questions that need to be answered in 2025, and it's going to be part of the playbook. And the question is going to be, do these things get enacted to the extent that they're being discussed right now? Can things move again as quickly as people thought they would? And do we have, if we change the immigration policy from basically an open door to a less open door and we start deporting people, does that push wages up? And I don't think we know the answer to that yet, but we also are seeing a big strain on resources because of people that are here. So does that balance itself out at all? I think it's unclear at the moment.
You mentioned the calls you got from clients after the election. I imagine there's some calls just on this point, sort of what those potential policy changes might mean. And we heard from the Fed Chair Jerome Powell that he and his colleagues are now beginning to entertain various counterfactuals, what might happen if this trade policy comes through or that, or if the immigration policy is implemented. Dovetail that with the analysis that you're doing. How do you think through all of those potential eventualities? How much is that preoccupying you? And Paul bringing up the fact that some of these things are inherently inflationary. How do you sort of think through what that might mean for portfolios?
So from an equity market perspective, the biggest issue is going to be earnings growth and margins. And to the extent that any of those things are impacting that in a negative way, that pulls some of the positive expectations that people have going into earnings for this year. It can take some of that away. We don't know what those puts and takes are entirely yet, but I think that to the extent that there are some concerns that those things will happen, you have to look at your earnings forecast more carefully, and you have to be very careful about your balance sheets and where I'm looking at multiples, because I think that you've got a market that's also at quite elevated levels, relatively speaking, to history.
And you talk about the elevated aspect or the levels of these markets. It really puts a lot of pressure, I guess, on earnings. And I think the earnings outlook for 2025 is, pretty aggressive, I would argue. I mean, I'm hearing 12, 13% type of earnings growth. Is that a material risk, do you think, to this market, or do you feel comfortable with those kinds of numbers?
So I would have argued that the expectations for this year were somewhat aggressive last year, and yet we managed to get through that fairly well. And I think this is where having those big themes like both AI and now quantum computing help you, because the AI came through this year. If you hadn't seen that come through in earnings, and you hadn't seen the growth, and you hadn't seen non-tech companies start picking up AI and using it, that says, okay, we've got more spending in that area. So if you've got a driver like that, it's very helpful. Whether or not that is taken apart by some of the other things we were just talking about remains to be seen, but the thematic goal is there.
Does that continue? I mean, we have focused so much on AI and its prospects, not just this last year, but the year before that as well, and what it might do, how it could be implemented by companies. You say some have been using it so far. Where do you see that story going as we enter into the new year? Is that still the overarching narrative when we look at kind of thematic stories for the market, or is it tapering off a little bit, or is it changing? How do you see it kind of progressing here in the new year?
I think it's changing in terms of where that spend is coming from, right? So the semiconductor industry, which was driving a lot of that, because the spend was coming from chips, has had a rougher time in the second half of the year, but the software industries have started to do better. So the implementation now and how companies can use it is becoming as important as building the backbone and the infrastructure. And the backbone and the infrastructure were on the semiconductor side. So if you look at where it's spreading out in technology, which is a benefit, because again, where am I going to get my earnings growth? It better be coming from more than just NVIDIA. And I think you're starting to see that. And the fact that companies can use it to help their own margins is something that is an important part of that spend going forward.
Fixed income. I'm sitting in my 2-year treasury, 4.35%. I don't feel like I need to be a hero and take credit risk. What do you think?
I think the fact that you've got spreads compressed so much, I don't necessarily think you want to take a bunch of credit risk here either. And I think that the discussion now about what's going to happen with the Fed and how much rates are going to come down again this year is now up in the air post that last meeting, which was much more hawkish. So whether or not, I mean, the market has been absolutely wrong about their forecasts in terms of warp, how many rates cuts we were going to get. That's been shifting around. But yeah, looking at that on a 2-year, that's a reasonable outcome at the moment, given that we don't know where fixed income is going to go.
All right, Sarah, you're going to stick around. Like, we haven't worked you enough on Bloomberg Television. You're going to stick around for another segment of Bloomberg Radio because you just love David Gura.
Take advantage of your beneficence here on Boxing Day.
I mean, you raised your hand, and Bloomberg took advantage of that. Sarah Hunt, thank you so much. We'll be right back with you to talk about some of these markets and maybe some individual names here. Futures, a little bit of red on the screen here. The S&P off about 19 points, the Dow off about 145 points, NASDAQ off 75 points. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, David, and Amy. President-elect Trump has picked Miami-Dade, Florida County Commissioner Kevin Marino Cabrera as U.S. ambassador to Panama, a country he's accusing of ripping off the U.S. at the Panama Canal. Wendy Schiller is director of political science at Brown University.
He's appointing people that he knows or that he likes, like, Fox News anchors or people from Florida. Pambani's been, close to Trump for some time now, or, the second nominee for Attorney General. So this is not atypical of Trump. The orbit changed from New York to Florida. And some of these appointments make a lot of sense.
Brown University's Wendy Schiller puts Marco Rubio as Secretary of State on that list. 29 survivors are recovering from an airline crash in Kazakhstan that claimed 38 lives. Russian authorities claim a bird strike took the plane down, leading to engine failure and an emergency landing attempt. But there is speculation that the plane was hit by Russian air defense before the crash. A grim discovery was made on a United Airlines plane. Officials in Hawaii are investigating the discovery of a dead body found in the wheel well of a United Airlines Boeing 787. The jet had flown from Chicago to Maui on Christmas Eve. How the body got there remains a mystery. United said the wheel well is only accessible from the outside. In Indonesia's Aceh province, people gathered today at a mosque to remember 20 years ago since the massive Indian Ocean tsunami hit the region in one of the modern history's worst natural disasters. Over 230,000 people died in a dozen countries, 170,000 of those deaths alone in Indonesia. Thousands of workers are facing the unsettling reality of heading into 2025 with going back to work 5 days a week instead of working from home. That can bring a host of challenges, including losing time with the family. Workers at Amazon, AT&T, and other companies have been called back to the office 5 days a week. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, David, Amy.
All right, Michael Barr, thank you so much. We appreciate that. Cornell hockey.
Okay.
I should be having this conversation with Scarlett Fu. She's the big,
and an alumna, and
exactly.
she was on the team.
I know she scored 2 goals in her last game. She told Tom Keene and I recently, and I'm not sure what league that is. 5-3-3 is Cornell, and they are in the Ivy League. They're 3-3-2. So they last played, December, 7th. Mm-hmm. And now they have the whole month off, and they don't play until January 3rd.
It used to be that when I went to school there, you'd have a very long winter break.
Is that exams and
winter break? No, just a long winter break because it is so desperately cold and awful there this time of year. They want everyone to stay away as long as they can. But Mike Schaefer, the coach's last season, 29 seasons with the Big Red.
Is that right? Very cool. All right, Cornell hockey, I know it's big. We'll cover it here at Bloomberg. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studios, I'm Amy Morris. Futures are lower. The S&P down 0.3%, NASDAQ futures down 0.3%, Dow futures down 0.3%, the 10-year Treasury yield at 4.63%, and the 2-year yield at 4.35%. Tesla was up 0.8% in pre-market trading after it rose 7.4% on Tuesday, and then finishing as the best performing stock in the S&P 500 during the session. Tesla has gained 86% this year. We do expect to see more movement on that today. Shares of Supermicro Computer falling 0.6%. The server maker gained 6% on Tuesday, and for the year, Supermicro stock has gained 21%. That company has delayed filing its latest financial reports. It did get an extension until February 25th. That helped it avoid the immediate threat of delisting from the NASDAQ. American Airlines now down 0.7% in pre-market trading. The carrier suffered flight delays on Christmas Eve, but avoided deeper problems after technical issues temporarily grounded all nationwide flights on one of the busiest travel days of the year. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Paul and David.
All right, Amy Morris, thank you so much. We appreciate that. David Gura sitting in for Tom Keene, doing his best effort to do that. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. Click on that live thing, and that's where we are. Sarah Hunt joins us. She's a partner and chief market strategist for Alpine Saxon Woods. She's sticking around for another segment. We appreciate that. Sarah, unlike Tom Keene, who owns the Mag 7, I missed that trade. Do I chase that trade here in 2025, or do I try to find some value, whether it's financials or consumer or energy? How are you talking to your clients about 2025?
So I would say that that's one of those questions, the answer to which is yes, which is yes, I have to have some tech. Yes, I'm going to look for some value in other places. It's difficult with the tech stocks specifically because every time you say, oh, they look expensive, I want to wait for a pullback. Sometimes you get a small pullback, sometimes you don't, but it's really hard to jump on it when you do psychologically, just because the concern is if it's going down, it's going to keep going down, right? So I think that if you are tempered in that and you say, okay, I need to start with some, you can start positions if you're going from zero, right? You start positions and you sort of see how things go and you give it a couple of months. But I think you have to look at both sides of the equation because I don't think that tech is going to be one of those areas that people are willing to rotate out of anytime that we can see in the near future.
You talked a bit about this at the top. That is the way that markets reacted to the election, the enthusiasm and exuberance we saw there at the beginning and how that's sort of becoming tempered, I think was the word that you used. Has that process finished its course, or are people still sort of trying to understand, you know, where the prospects are going to be higher than otherwise going forward here?
Well, I think that the hard thing you have is that November was such a strong month, and I think that people are always looking for things to be a little bit less expensive, and all it did was get more expensive. And December has come down a bit in certain areas, but it hasn't really come down a whole lot. And I'm not saying that because I want it to. I'm just saying that because that's where we are. And I think going into next year, it's going to depend on a lot of different things that, like I said, we still don't know yet. But I think that the enthusiasm for equities is still there, and especially enthusiasm for U.S. equities versus other parts of the world.
You know, that's one of the things I've heard just in the last several months. International money increasingly coming to the U.S. market, and that is maybe one of the drivers of 2024 performance in the U.S. markets. Are you seeing that? Is that a thing? I mean, is people just putting more and more of their allocation, global allocation, into the U.S.?
Well, I think that there's an expanded pool of money to be invested, right? Because there's still a lot of money swirling around in the system. I think that the concerns of what's going on in Europe and the concerns of how that plays out over the next year or so does make the U.S. look more attractive. And I think that's been the case for quite some time, but we keep getting these enthusiasms that it's going to be better for markets outside. The stronger dollar makes emerging markets a little bit more challenging here. And I think that there's just some structural issues that are going on in Europe that are very difficult to fix. And with what's going on in China, the automobile industry is under a lot of pressure. That's a big driver for parts of Europe. So I think that there are some reasons that are not wrong for people to be concerned about other markets outside of the U.S.
I promised we'd come back to the Fed, and I'm eager to get your sense of sort of where things are headed. I'm curious if you were one of the many who had your head in your hands as that press conference happened with Jay Powell a couple of days ago. What did you take away from what he had to say? What was in that statement? What was in that plot about the path forward here? And maybe you can dovetail that with kind of your outlook for the U.S. economy in the year ahead.
Well, interestingly, I don't think it was a shock that they took the number of cuts down into this year. I think what surprised people the most, including ourselves, was that they took up the inflation forecast while they were cutting rates, which is not necessarily something that you would expect. But I think that you had I say that the market's been wrong about what they've got baked in, but no one likes a very quick surprise. So the fact that the December cut was sort of really very much expected, I think that potentially market reaction could have been worse if they had not cut in December and said everything that they did. But they were hawkish enough that the market reacted pretty negatively. So yes, my head was in my hands because no one likes to see the market do that on any day.
So how much of our 2025 outlook is predicated upon the Fed
Great
easing
question. Yeah.
versus earnings, like kind of the basics of the fundamentals here. How much?
So I think that there's a lot of noise right now about the politics, but I think ultimately it's going to come down to earnings and it's going to come down to the economy. So how do those two things play out? I think that there was a huge concern when rates went up so fast that higher rates were going to be super detrimental. It hasn't been as bad as people thought it was going to be. Those lags, long and variable lags, are still lagging. And so now, do we need to cut as much as people were baking in? I don't know what the answer is. I think that there was a period of time post the global financial crisis with unusual monetary policy. I don't think we're going back there. So people are going to have to learn to live with some kind of rates. I think it's really going to depend on just general levels of economic activity. And there's some influence from politics, but it's not entirely politically influenced.
You came in here and Paul and I were grousing about the housing market, and you talk about sort of the reaction to rates. We've been monitoring, of course, what's been happening with savings and credit card use as well. When you look at that, just sort of generally at the health of the consumer, what's your takeaway? How does that shape what you may or may not be interested in here in the year ahead?
Well, I think that's a big part of why the economy is still doing so well, because without that, you would see a much slower economy. And I think that's where that tension between the Fed wanting to cut rates but looking out at some of the things that they're concerned about is also a problem. I think that we got some good numbers on inflation post that Fed meeting, and that helped a lot, because without that fall in the PCE, I think that markets would have started to be continually concerned that no more rate cuts were coming. But I think that there is some room for that to look okay next year. It's really going to depend on a lot of other things. But yes, the fact that people are spending is a huge benefit.
What's kind of your theme for 2025 when you talk to your clients these days? Is there a theme? Is it just stay steady here, stay in the market?
I think that after 2 years of strong gains, what we are telling people and what we talk about internally is we don't think that there's some giant tragedy on the horizon, but the volatility should be a bit higher given the fact that we have had less so in the last year or so. And because we're coming from a definite cycle where we're going to be cutting to maybe a cycle where we're slowing those cuts and or we might move into a more neutral phase, that could possibly have some volatility on the equity side as well. But as long as the economy stays, it's in pretty good shape. And to the extent that, again, the U.S. is benefiting from a lot of the spending patterns, we're not overly concerned that it's going to be terrible. It's just don't get used to 20% plus 20% returns on a year-over-year basis.
I told my kids that. There's no 401k. I was like, dudes, it's not like this.
Sweeney's advice.
Exactly.
In the minute we have left here, what do you say to your more conservative clients who maybe have a lot of cash, still aren't in the market? What's the case you're making to them to get into this market and to allay some of the nervousness that they might have?
Well, I think that for the more conservative people, you're also looking at some more fixed income. And because rates haven't dropped as much, that gives you some room to be more balanced. So we're looking for folks like that to look at balanced accounts, because you don't want to not participate in the equity markets. But at the same time, if we're a little bit worried about volatility, then you probably want to temper that a bit with some bonds. And I think you can do that here. And I think that was a big question, where do bonds sit in your portfolio given what's going on? And I think that that's a place where people are finding a little bit more comfort from a stability standpoint. But I still think that the equity markets are not a bad place to be ultimately.
Yep, agreed. Sarah Hunt, thank you so much for joining us. Really appreciate you coming into our studio today.
It's good to see a real person here in the studio.
She did some double duty on Bloomberg Television and now radio. We appreciate it. Sarah Hunt, she's a partner and a chief market strategist at Alpine Saxon Woods. Looking at the futures here, quiet day as you would expect here. The S&P is off about 20 points. The Dow's off about 140 points. And the Nasdaq's off about 87 points. Each of that is about 0.3% yields. Lifting just slightly here. The 10-year Treasury, we're at 4.63%. That's up about 4 basis points on the commodities front. WTI crude oil up slightly, just above $70 per barrel. Gold higher as well. And looking at Bitcoin for Tom Keene, I know he's tracking it closely at the Cafe Carlyle over there in Paris. Down 3%, 95,000 for your cryptocurrency. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Amy Morris. Futures are lower. S&P futures down 0.3%. NASDAQ futures down 0.4%. The Dow futures down 0.3%. The 10-year Treasury yield is at 4.62% and the 2-year yield at 4.35%. MasterCard says U.S. retail sales increased 3.8% year over year from November 1st to December 24th. MasterCard's Spending Pulse survey measures in-store and online retail sales, excluding automotive. The company says online shopping grew 6.7% year over year, and while solid spending underscored consumer strength, shoppers were also looking for value. Dan Ives at Wedbush says they're raising their price target on Apple to $325. That's up from $300, saying that Apple is heading into a multi-year AI-driven iPhone upgrade cycle that is still being underestimated by the street. Shares of Apple down 0.2%. Cryptocurrencies and stocks associated with Roaring Kitty are higher after the trader's apparent Merry Christmas wish. Keith Gill's message conveyed his Christmas wish and was not nearly as cryptic as some of his earlier social media posts. The post pushed GameStop 7% higher overnight. GameStop shares right now up 4% in the pre-market. And that is a Bloomberg Business Flash. Paul and David.
All right, Amy Mars, thank you so much. We appreciate that. As always, David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. David, some economic data coming out here today. Initial jobless claims came in at 219,000, pretty much in line with expectations. Consensus was for 223,000. The prior period was 220,000. So, I mean, again, initial jobless claims for as long as I can remember, just right around this 220,000 kind of level. And that seems to be the new normal for couple of years now.
Same with continuing claims this morning. So here we are on this Boxing Day. Markets open here in the U.S., as you pointed out, not open in Europe.
Yep.
But economic data coming through here on the 26th of December as well. And we'll talk more, I'm sure, over the course of the morning about the health of the U.S. labor market.
Yep. Seems
another
pretty,
data point for that.
Seems pretty solid to me. Let's head down to talk about that discussion of all things coming out of Washington, D.C. We head up to Providence, Rhode Island. Wendy Schiller, professor at Brown University, joins us. Wendy, I guess there's a million ways we can go here, but I just want to start about, I'm wondering how this, when we initially had the election, the news flow was really about the nominations for cabinet positions for President-elect Trump. And now I'm kind of wondering, as these things have kind of stewed for several weeks, we're going to be getting towards confirmation hearings later on in January. Is there a feel of how these things are going to go? Because there are some nominations for cabinet positions that are a little bit more controversial than others.
Well, good morning, Paul. Good morning, David. I think that in general, we know from history that presidential nominations for cabinet positions generally go through. There are a couple of really well-known examples where they went down. So John Tower many years ago, Bill Clinton had a very difficult time getting an attorney general nominee through some vetting mistakes, I think, early on. But in general, you don't lose too many of them as you go through. You know, there are still vulnerabilities associated with the Hegseth nomination at Defense in the Armed Services Committee and Tulsi Gabbard. I think those are the two that I'm watching. I'm not sure Trump gets both of them. And if you had to put money down, I think Hegseth seems to be getting enough votes to get 51, get through the Senate. I'm not sure about Gabbard, but some of the other ones are quite standard, sort of what you'd expect from a Republican president, and I don't think they're going to have any problems. And Trump wants these people in place as soon as possible. He's already dictating policy for particular departments. You can see this in foreign affairs and other areas, border security. So, you know, he wants them in, but it's difficult to move the bureaucracy even when they do get in a timely fashion.
Were I a senior Democrat on, say, the Senate Foreign Affairs Committee or the Armed Services Committee, were I Elizabeth Warren on the Financial Services Committee, and I've got Scott Bessent coming before me, what is the job of a senior Democratic senator in these hearings, recognizing the fact that, as you point out, most of these nominees are going to get through? How much hay should I, again, senior Democratic senator, how much hay should I be making here about those particular nominees and their problems, just to sort of make it into a spectacle and to sort of raise alarm or concern about some of the folks that President-elect Trump has put forward?
Well, David, I think the messaging coming out of the 24 elections with the Democratic Party is losing or has lost a portion of working class Americans or middle class Americans. So the messaging should be continuous across all of these committees is what will you do to protect the average American, the consumer, the employee, and also for personal security and safety in a humane way. And I think that's the thing where Democrats had the upper hand, and now they don't seem to have that upper hand, at least at the presidential level. But the congressional elections, particularly the House elections, show the Democrats they do have traction on sort of the worst of what government can be under an administration that doesn't show sort of compassion for people or isn't concerned about working Americans. Everything from your right to unionize to whether you have workplace safety to how you treat people who come here undocumented. So I think there's a lot of ground to be gained by Democrats focusing on those aspects of these really important issues that Trump has brought to the fore, but of course has run into trouble in his first administration in the way that he executed his policies.
Wendy, what do you expect from the first 100 days of the Trump administration?
Well, we've talked about whether, we should think about these in 20 days, 50 days, 100 days. It's interesting to have a president who was president, lost, and come back. We haven't seen that in more than 100 years. And so the question is, what will be a continuation? What will be the sort of Trump personal vengeance actions? And what will be new in Trump too? And I think that's the thing that's a little bit uncertain. He seems to want to do what other presidents like to do, bypass Congress. Even if you have a trifecta, even if you control Congress, we saw from last week's budget negotiations that it doesn't mean you're going to get what you want. So I think the Trump administration will focus on doing as much as they can through executive power and not relying on Congress, with the exception, of course, of the Trump tax cuts, which I think Trump would rather see passed sooner rather than later. There's a disagreement between the House and the Senate Republican leadership on how fast that can go.
We saw all the dysfunction surrounding the continuing resolution. Then earlier this week, we got that report from the House Ethics Committee on Matt Gaetz, the person that President-elect Trump had put forward to be the Attorney General first through the nomination. A pretty damning report by all accounts, and I think one that in past administrations, past eras, would have created a lot of stir. Now, again, Matt Gaetz no longer in the Congress. How did you read that report? How do you think about the investigation that took place, the report that came out of it, what it says about Congress's attitude towards transgressions, to put it mildly, by a member of the House, former member of the House? What does it say about sort of the state of Congress today?
Well, I mean, Matt Gaetz wasn't the most popular member of Congress. I'm not trying to be facetious here, right? So when you try to interpret what happened here, it's hard to sort of make generalizations. But I think in general, those two actions coupled together says the House Republican Party, there's a line you can't cross. In other words, they're going to stand up for some of their constitutional power. And they are, of course, looking immediately to 2026. And they know what happened in 2018. They didn't just lose power, they lost a lot of seats. They understand that Trump has, some really good coattails, but some very dangerous coattails for them looking ahead. So they want to assert their power and stay, on their platform. And that's what the budget deal was. It was saying, we're not going to just give you the debt ceiling for 2 more years. We actually promised we'd cut the budget. So I think that's the signaling that the Trump administration should be taking. And we're seeing that Trump is starting to talk more unilaterally because he sees that this road will not be so smooth for him, even in a Republican House with, some very, very small margins. And with Gaetz, I think a lot of people were looking to open the door, for exiting for Matt Gaetz, and I think they all joined forces to make that happen.
Elon Musk and Doge, is that really going to be a thing going forward, do you believe?
Well, cabinet departments have to be created by Congress. Under George W. Bush, created the Department of Homeland Security in response to a lot of the failings that led to 9/11. So, there's a reason to create a cabinet department, and Congress does that. Without that infrastructure, it's just unclear to me how they implement what they're talking about. And if you want to fire a civil servant with legal protections, that's going to take some time and some court battles. So it's just unclear how quickly they can do what they want to do and what kind of authority or legitimacy they have. And let's all watch the relationship between Musk and President-elect Trump. The Democrats are already calling him co-president or President Musk. It's bothering Donald Trump already. Let's just see how long they last as a partnership. And then those two things combined, institutional sort of sluggishness and also sort of interpersonal relations, I think that's going to really have a lot of impact on what kind of influence they can have in reducing the size and scope of the federal government.
All right, Wendy, thank you so much. We appreciate that. Wendy Schiller, she's a professor at Brown University. Futures a little bit negative here. Pretty much S&P, Dow, NASDAQ all down about 0.3% in pre-market trading. Yields up slightly. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, David, Amy. Israel is continuing attacks in the Gaza Strip, even as negotiations continue toward a ceasefire with Hamas. Bloomberg's Ethan Bronner has the latest from Tel Aviv.
There was one event where 5 journalists and people who work in Hamas-based television were killed in a car. The question of, whether someone is a Hamas activist, if he works for a Hamas-related organization, is one that we'll have to have another time.
Bloomberg's Ethan Bronner says the journalists were killed outside a hospital in a central Gaza refugee camp. Israel's military says it targeted a group of fighters from Islamic Jihad. Azerbaijan is observing a nationwide day of mourning for the victims of the air crash that killed 38 people and left all 29 survivors injured. Speculation mounted about a possible cause of the crash, including the plane being hit by Russian air defense. The world's largest menorah was lit in New York City last evening, marking the start of Hanukkah. In Washington, D.C., the 46th annual National Menorah Lighting Ceremony took place, ushering in the start of the 8-day celebration, also known as the Festival of Lights. Homeland Security Secretary Alejandro Mayorkas attended the event and marked the occasion on behalf of President Biden and First Lady Dr. Jill Biden.
We can lean into our shared tradition and values as a beacon for what we aspire to. This Hanukkah, let us rededicate ourselves to the light that defines us and the better world we seek to build.
The beginning of Hanukkah happened to fall this year on Christmas Day. Finally, a lot of Americans, after an intense presidential election campaign, are looking for a break in political news. That's evident in a poll from the Associated Press and ORC Center for Public Affairs Research. The poll found nearly 2/3 of Americans are saying they have found the need recently to cut down on their consumption of political and government news. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Amy.
All right, Michael Barr, the business of sports. This Lamar Jackson dude is serious. Oh, my goodness, yesterday. They won 31-2 yesterday, the Baltimore Ravens over the Houston Texans. Jackson had 87 yards rushing, and for his career, 6,110 yards moving and past Michael Vick, who had 6,109 in his 13-year career. The guy can do it all.
I'll put it this way. If you had Lamar Jackson in your fantasy football league, you're probably taking first place money right about now.
Yeah. When you see a great player like that, or Patrick Mahomes or something like that, you're like, and then you look at New York football and you're like, man, we are
go there.
Nowhere here. I don't know. That's how it's supposed to be played. And it's been years in New York since we've seen any credible football, I think.
I was reading an article about the rankings of all 32 football teams. Right at the bottom, 32nd, the New York Giants. and I felt horrible because, come on, G-Man. I'm an adopted son of New York here. Come on, pick it up, man.
Yeah, it's unbelievable. But
2-13 for the Giants. Is that the record?
What is that?
2-13.
2-13.
Yeah,
Lovely. There you go. So that's kind of how we roll here in New York, folks. We got nothing. It's pitchers and catchers in a couple of months. I guess that's kind of how we think. But the Knicks are great. So we'll hang our hat on the Knicks. But again, I was just watching him yesterday. I was like, holy cow, this guy is a generational player. And it's just, he runs, he throws, he just got that commanding presence. Kind of fun to watch here. But 31-2, how ugly was that? S&P, we are off 23 points here today. The Dow off 190. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Amy Morris. Stock futures remain lower as traders are weighing the latest jobless claims data for any clues on the Federal Reserve's next steps. The S&P 500 actually futures now down 0.4%. NASDAQ futures down 0.4%. Dow futures down 0.4%. The 10-year Treasury yield at 4.62% and the 2-year yield at 4.35%. Bitcoin declined even with cryptocurrency stockpiler MicroStrategy planning to issue more shares. That would have allowed it to buy even more tokens. Bitcoin is now down now more than 3%, and MicroStrategy shares are down more than 3%. Toyota shares rose 6% in Tokyo following a 2-day gain of 11% on reports of a potential increase in return on equity target. Analysts expect that company to boost earnings and profit margins. And oil prices rose from China's fiscal stimulus measures and a U.S. industry report showing a drop in crude stockpiles. Brent crude is up 0.6%. WTI up 0.7%. And that's a Bloomberg Business Flash. Paul and David.
All right, Amy Mars, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Head over to youtube.com. Search Bloomberg Podcast. That's where you'll find us. You know, David, I saw the jobless claims come in today. I was like, kind of right in line. No big deal. Somehow, Bloomberg News can spin this into a story.
Yes.
U.S. continuing claims rise to highest in more than 3 years. I didn't know that.
I didn't know that either.
I mean, leave it to our good friends at Bloomberg News to figure out really where the nugget of value is. I just kind of thought, it's kind of right in line. It's always in that, got a 200 kind of handle on it, and no big deal. But it's a high.
They looked at the data.
They do.
Highlight
they actually do the work.
They do the work.
They do the work.
We just talk about it before we know about it.
Yep.
Largest increases over the last week: New Jersey, Connecticut, and California. Florida, New York, and West Virginia saw the largest declines in claims. So take from that what you will. But
seasonal factors. Everybody's moving down to Florida. I'm sticking with the Jersey Shore. You can have it. Joanne Bianco joins us. She's a partner of Bond Blocks. Reason we like to talk to Joanne: A, she's a very nice person, but B, the people at Bond Blocks are really smart. You know, ETFs for the fixed income market, and they dig deep. You can do anything you want in the fixed income space. They have an ETF for you, so investors can really get different types of exposure. So, Joanne, thank you so much for joining us. Joanne, 2024, how are you putting that in your rearview mirror? How are you kind of encapsulating 2024 from the fixed income perspective?
Yeah, well, it's been a rocky environment for long-dated fixed income asset classes. But the bright spot that we saw in 2024 were the credit markets. So the U.S. high yield market had another really good year. Short-dated BBB corporates did well. So there was just, a lot of bright spots in terms of credit. And especially like the lower in credit quality, the better the performance. So the triple C rating category was the best performer in high yield.
When you look at this story going forward, is it a continuation of what we saw in 2024? How much do you see changing here as we get into the new year?
Well, we still have really supportive fundamentals for credit sectors in particular. And so that means to us that could be another year where we see credit do very well. And it continues to be one of our top picks in fixed income. We're still more wary about long-dated fixed income assets, long duration treasuries, long corporates, the U.S. aggregate in general, because it's a long index. We think there's more volatility to come there. And, we would just rather focus on, the coupon income and the reliable fundamental, or, the resilient fundamentals in credit to be where we focus on in fixed income.
Kind of in my 35-year Wall Street career, one of the real amazing markets to see develop is private credit. I came into Wall Street, and private equity was the bomb, and we all kind of understood private equity. Then private credit really became a growth business, a new, real vibrant asset class after the great financial crisis. So, of course, I expect my friends at Bond Blocks to have an ETF for that. What's your private credit ETF, Joanne?
Yes, we have a private credit ETF that we're so excited about. this offering. It's PCMM is the ticker. So it's a private credit CLO ETF. So it buys private credit CLOs, and they're focused on primarily middle market companies, and that's been just a very strong area with strong economy. And so our fund enables investors for the first time to have access through an ETF in private credit middle market loans.
Just relishing this vision of you as a young man being approached by an ETF. First of all, what you've made of that, and then private credit as well. But Joanne, I'm curious how you're looking at volatility. We had a guest a little while ago talking about how, in light of all the undulations this market has been through over the course of the last year, we haven't seen the kind of elevated volatility we might have expected otherwise. How are you thinking about that, just generally going into the new year? How are you looking at it in terms of where there might be opportunity going forward? Again, just talking about volatility here.
Yeah, I think the volatility is not necessarily your friend in the long end for treasuries or just long dated asset classes. You can just see that. I mean, when you think about it, the 10-year is up 100 basis points since September 16th, so right before the Fed meeting. That's a really huge move, and 50 basis points this month. That's very painful for investors when you could be clipping easier coupons if you stay shorter in duration. So we just prefer not to focus. We prefer to focus more on credit over duration in an environment where we think there's still going to be high volatility in long dated assets.
You guys have 25 ETFs for the fixed income business. Where are you seeing flows these days, Joanne?
We are seeing flows across all 25. So we have a treasury suite that, they're target duration treasury funds. And so they start with like a 6-month and they go out to 20 years. And people use any or all of them depending upon the strategies that they want to employ. We have a lot of different high yield funds, both industry sector and credit rating category. So we have one large investor in our industry sector funds that has bought all 7 and just weights them the way he wants to instead of buying HYG. So it's just, there's just a lot of things. We also have an emerging markets, short duration emerging markets fund, which is a really great, has been a great idea to, just reduce interest rate risk and still have access to emerging markets. And then finally, we have tax-aware strategies, and those are really compelling in terms of, just trying to maximize after-tax return and also focusing on short duration assets, and it's a crossover strategy approach. So
that's where I wanted to go in the minute we have left. I know that's like a huge component of your thesis for the new year. We've talked about credit, short duration. When it comes to being tax aware, what's the counsel that you're giving clients about how best to do that going into 2025?
Yeah, so what that means for investors is that they should look at the whole opportunity set of fixed income choices through a tax lens, because if you just buy tax-exempt securities, maybe you're leaving some money on the table. So sometimes paying taxes on higher yielding investments is a better idea. And so that's what we try to do with our ETF tax, TAXX, great name.
Joanne, thanks so much for joining us. Always appreciate getting your thoughts. Joanne Bianco, partner of Bond Blocks. Again, ETFs just focused on the fixed income space. They do it by, I was looking through the run-up, they got, by industry type, TMT, energy, healthcare. They've got it by investment grade versus high yield, and they've got governments, they've got tax advantage. So if you want to play the fixed income space and you don't really feel comfortable buying an individual bond or a corp or a U.S. government security, they got ETFs for that.
We got to talk about this in the next couple hours. Why don't we tie a bow on the year? ETFs did so well in 2024, and obviously prospects for the new year looking quite golden as well.
There's this guy, Eric Balchunas at Bloomberg Intelligence. The guy's made a career.
Off the grid today, unfortunately.
Exactly. Yeah, completely off the grid. I mean, Philadelphia, by definition, is off the grid, and he's a big Philadelphia guy. You know what they do in Philadelphia on New Year's Day?
No.
Mummers Day Parade.
Ah, yes, I've heard of this.
I don't
know what it is.
Yeah. I grew up watching the Mummers Day Parade. Still have no idea what it's all about, but they are all into it down in Philadelphia. It is a great tradition down there in the great city of Philadelphia, and that's where Valanciunas hangs his hats. All right, Tom Petty, gone too soon. This is Bloomberg.